Hello guys, welcome back to my channel. This is John again. If you have not subscribed, make sure you subscribe and link that bell icon so that when I post a new video, you're gonna see it. So today we're going to talk about USDCHF. The main reason why I want us to analyze the USDCHF chart is because there is a trade that is coming in as soon as maybe tomorrow, today, or any other day, so long as it gets to that level. Note that in this strategy, the strategy of the big banks, because that is the strategy I'm going to teach you, we actually don't care what the market does. So long as it has not reached the level that we are looking to buy or sell, we actually do nothing about it. So as you can see right here, USDCHF has been selling for a very long time now. The previous high at which point the market was at its highest was 2022 10th, okay, 16th of the 10th month. The market has been selling all along, making lower lows and lower highs, lower lows, lower highs, lower lows, lower highs. Now, this is not quite a lower high because as you can see, it broke this level right there. But let us draw the levels once again. So as you can see right there, like I told you, we are drawing these levels on the weekly chart. Since this weekly chart summarizes all the news feeds that are coming in. You know, when you go to Forex Factory, there are always news releases that are being released every now and then. But when you're looking at the higher time frames, then all that news releasing or the news that has been released um, can get summarized. Since you're looking at the weekly candles, you get to see how the market ended up over that week. So now let's look at the trade for this chart. So as you can see here, the market had formed a lower high at this point. So we can actually put our level right there. And for you to be accurate on how you put your levels, I suggest you open the line graph instead of the bar graph. You see, once in the line graph, you can actually see the high as well, much clearer than you would have seen them on the candlestick, the Japanese candlestick version. Let's just move to the end. Okay, here we are. So we have a point at which the market formed a lower low, then formed a higher low, breaking that lower low to form a new lower low and forming a new lower high. Now our levels are at this point and this point. See how easy that is? Now we go back to now the body or the Japanese candlestick version of the chart, and as you can see, the market did try to break this level right here because this is where we are looking to sell, but the market did break it and went to retest the level above where it was rejected, and again coming back to this previous lower high. So now we are looking to sell this chart from this point back down to form a new lower low, all back down to the previous lower low. So make sure, maybe this is where we're going to put our profits, take profits, because you never know if this level right here will be the one to turn the markets or turn the direction. So what we do is just we put our take profits right there and our stop loss just above this level right here. So we can now go to the daily chart to look for an entry. And this is what we look for. Soon as a level is broken and we are interested, we have to wait for a full daily candle to be formed below that level. Look at this. The market came back down, breaking this level that we were previously looking to sell at, confirming that the sellers are still in the market and waiting for a full daily candle, as you can see right there, full daily candle to form below that level. And once we form this daily candle, what we're looking for is that market to retest this level right here. And note this, until that happens, We really don't care. If the market does continue to play around this place, that is not our business. Our business is that once the chart gets back to this level right here, that is when we're going to sell, looking for take profits at this point, and stop losses just beyond this level right there. You can put your stop losses right here because as you can see, the market came tried to break this level previously, but did not actually break it. The sellers held the market as expected, and we had that sell. So the same thing can happen right here. So we can actually put our stop losses just above this noise in the market. That's about 57 pips. So we can have a maybe 65 pip stop loss. So you can put your stop loss right there. Having a 65 pip stop loss ensures that even when the market start, making this kind of noise, you're not going to be stopped out. So that's, yeah, 64, 64.6. That's about 65 pips. And what's the reward of this particular trade? This particular trade can give us about, that's what's how many pips? That's 475 pips. That's a good risk reward ratio. We can actually use the um, trading view version to be able to see it very well. I don't know if I have it in my watch list. Aha, USDCHF. USDCHF. There we go. Come, baby, come. Here we are. So now, like we see, this is where we're looking to get our sell at. It's going to be a pending order. So if you are watching, you can actually make this pending order. You're making this pending order. Let me open the daily chart. It's about right there. Making that pending order. That particular point, let me confirm it. What's the price on this particular level? Horizontal property. You take this. This is the entry price. So you can put it on this trade right there. So entry price is going to be on that price. That is 0.908872. Okay, and there is the entry price. Then you're going to put our stop losses at 60 pips, 65 pips stop loss. So you're going to put this right there. It's going to be at 600 or 65, 656. Okay, and that's going to be the stop loss. So at that particular point, so this is a pending order, don't forget that. So it's not entered yet. And the stop loss or the take profit will be at this point. So that's 8.2 risk to reward ratio. That's a good risk reward ratio. If you risk your $100 there, you're going to earn $820. If you risk your uh, $200, you're going to earn about 160. Well, that's about $1,600. Is it so? Well, you do the math. Okay, and that's basically it. So, like I told you to do, to look at USDCHF. Well, my thoughts on this chart is that it's going to be a sell from this point to this point, and I did show you the thought process that I used to come up with that trade. Being that we are looking at these two levels, let me remove this level because that's not a level specifically. This is where we are going to put our stop losses and delete that. So there you go. You're going to have an entry at this level, and I can read it for you. So for those who are going to enter it, that is 0.90887. Your take profits are going to be at 0.86140, and your TP, or the next level that we are going to be looking at, if this level is not respected, will be going to be this one, where it's going to be this one where we're going to look for a buy if the market breaks this level and comes to retest it. So at this particular time, it's a sell. So there you go. Again, guys, don't forget to like and subscribe for more content and information on how I train. And guys, welcome.